Here are 3 ways to pay off your mortgage early. This is Rich with the Fred Allen Real Estate Group, and wanted to give you an idea. If you're thinking or deciding that you want to pay off your mortgage early, which most people do, before retirement, you have to think about, is this the right move? And here are some strategies you should consider. So one, of course, is refinance to a shorter term loan. One way to get rid of your mortgage faster is to refinance to a shorter loan term, such as a 10-year, 15-year, we even offer 22-year, 18-year. So this can help you lower your interest rate and put you back on track to paying off your mortgage earlier. So, however, it's important to note that a shorter loan term usually means higher payments. So make sure your monthly budget can handle the higher payments before you refinance to a shorter term. So my company makes it very easy to compare with multiple lenders. So if you are looking at refinancing, check with maybe bankrate.com, look at what other lenders are offering, and then come to me. We can see what the current rates are. Checking with me and my company, it's free, secure. There's no effect on your credit score, and we've got over 100 lenders that we can shop your loan to. So 2, switch to bi-weekly payments. When you switch to bi-weekly, the payments, you end up splitting them in half. So then you end up paying 2 times a month instead of once. So because there are 52 weeks in a year, you end up making 26 payments, which is the equivalent of 13 monthly mortgage payments. So with this strategy, you'll knock a few years off your mortgage, usually at least 2.5 to 3 years, and reduce the amount of interest, of course, that you'll pay. You'll save yourself tens of thousands of dollars. So this also can be helpful if you want to maintain your current budget, but pay off the loan a little bit earlier. The third thing is recasting your mortgage. Most people don't know about this, but with a mortgage recast, you make a large lump sum, usually at least $10,000 or more, and you pay that right towards the principal. So after making that payment, your lender will re-amortize your loan based upon how much you put down. So this strategy can be a great way to cut your monthly required payments and potentially, again, save you tens of thousands of dollars on interest. So once you recast your mortgage, you can make bigger payments and work to pay off the mortgage even faster. You can do this several times. So what to do if you can't pay off your mortgage before retirement? So retiring without a mortgage isn't always possible for most people. But there are still strategies you can utilize to lessen the financial burden posed by mortgage payments. So you could look at getting a 30-year refinance. So when you go back to a 30-year, you can, of course, reduce the monthly payment that you're currently making. Makes your payment a little more manageable. If you've got a fixed income during your retirement, you'll pay, of course, more interest over the life of the loan, but you'll need to factor in some other things too, like closing costs. So you can look at rates. Again, for me, we can price it out for you. We provide a lot of transparency into our lender fees, and we can give that to you up front, and typical other sites don't do that. So the other thing you can do is consider a reverse mortgage. Another way to reduce that financial burden is a reverse mortgage. You'll need to be at least 55. They just lowered it from 62 to qualify for this type of loan. So you receive regular payments or a lump sum, and then you could use the money, of course, for various expenses around the home. So repayment on a mortgage, a reverse mortgage, is only required after you no longer occupy the home or if that person is deceased. So you can get an FHA approved reverse mortgage. The lender can only recoup what your home sells for at that point. So, but hopefully these tips helped you, and let me know if I can help you now or in the future. Thanks.